Hello, good afternoon, everyone out there in my LinkedIn universe. We are on with Susan Combs, founder of Combs and Co. This is Trisha Tate. I'm CEO of FinCore, a fractional CFO services company, and the series you are watching is Dancing with Numbers in Real Life. For those of you who may not know, 2 years ago, I wrote a book called Dancing with Numbers: Grow a Financially Healthy Business and Choreograph the Life That You Want, with the intention of basically allowing business owners to have a CFO within some pages, right? So not everybody has access to a CFO and that kind of strategic financial thinking. And so I wanted it to be accessible and available to more business owners, particularly women business owners. Wrote the book 2 years ago. Now it's on Audible. And I wanted to continue to normalize conversations around money. So, what better way to do it than to speak to business owners who are having their own relationship and their own journey with money, and having them share those open, honest feelings about their relationship, how it's evolved, and then ultimately how they dance with their numbers. So today we have Susan Combs, as I said, CEO of Combs and Co. Um, so it's an insurance company, an insurance brokerage firm based in New York City, which Susan started at 26 years old. What was I doing at 26? I was a Wall Street refugee. 26 years old, with a drive to do more better. This internal mantra has resulted in numerous successes and firsts, like being named the youngest national president in the over 85-year history of the Women in Insurance and Financial Services organization, and the first female broker of the year winner for BenefitsPro. That's a little tidbit about what she does, but I know Susan is an expert witness on other things. She's written a book. Tell me a little bit more, or tell us a little bit more about yourself, Susan.
Yeah. I mean, to be honest, it depends on the day on what I'm doing. I mean, it's just, because if I'm back in Missouri, I might be, at one of my farms or something like that. And I look a lot different than I do today. But I started my brokerage firm at 26. I didn't know what the hell I was doing, but I knew how to treat people. And there's just been opportunities that have presented themselves along the way that have allowed me to be open and, come up with a book, start a nonprofit for veterans as a tribute piece to my late father. And now I'm doing a lot of speaking and, as you said, the expert witness work as well. So it just, again, I don't get bored because there's always something a little bit different to do. But that's, even though, I mean, I've been in New York now. It's over 23 years that I've been in New York. So I've lived in
Wow.
New York longer than anywhere else, but
You
I'm
are a New
still a Missouri
Yorker through
girl.
and through. Yeah. You're a Missouri girl, but I know you a little more personally. You're a New Yorker, and the other thing that we share is the love for fitness and health and
Mm,
wellness. So you've
yeah.
been a personal trainer
Mm,
at some point. I worked at Equinox at some point. So we're all arounders
yeah.
here.
Yeah.
But I love the diversity of that. Uh, with people in my network. So let's dive into this conversation around financials, numbers, your journey, particularly with numbers. So I like to ask every person, every business owner that I interview on this call, on this LinkedIn Live series, what are your earliest memories around money? What were the lessons, and who taught it to you?
I would say, I mean, I'm a Taurus through and through, so I'm all about the money and how I make money and how I can make money and always looking at different things like that. And so even as a kid, I was like, what job can I do that I could get paid for? And my parents were ones that gave us an allowance, but I will tell you, my first allowance that I remember was $2 a week. This wasn't like a $50 kick or anything like
Wow.
that, but it was just to do kind of some odd jobs. I remember even my mother did a job jar for us at one time where she put a value associated with each task. And we're talking about like take out the trash, you get a quarter, type of thing. Run the vacuum, you get a quarter. And so it was always like, okay, how can I rack up as much money as possible? But I also also had a lot of entrepreneurs in my life. And my aunt owned a dress shop in my hometown for 35 years, where I grew up. My mother also had a business, and my parents were hustlers, and and I do have that behind me. I didn't even think about that when I said that. But my father had two full-time jobs plus the farms my entire life. I mean, my father was a major general in the Air Force. He was also a civilian judge. And the example that I was taught was definitely live below your means. And growing up I grew up in a town of 986 people when I left, and so there are a lot of have-nots in small towns, because it's just how things are when you're in a rural farming community. But my parents just always worked hard, and my dad really worked hard, and so that's the example I got to see. And my parents weren't afraid to talk about money. So I know a lot of times. There can be people that if their parents don't talk about money, they're very uncomfortable with money. Or if their parents were, had to declare bankruptcy, or they're trying to figure out how to pay the bills, like there can be a lot of stresses. That just wasn't my upbringing, because again, my parents were willing to do without when they needed to do without. And the stories and the lessons that I learned, I mean, my parents, when they got married, I remember, you know, just stories of like they couldn't afford a dining room set. So my dad bought a picnic table set and spray painted it black so it looked elegant. There were stories
That's
about them when they were first married that my mother graduated high school in Washington, D.C., and my father was in the Marine Corps there. And they decided to go back to Missouri so my father could finish law school. And my mom had a prized possession was a color TV in 71, 72. And when they were driving from DC to Missouri, it busted, and they couldn't afford to get a new TV. I mean, it wasn't something it was a luxury item then. There was stories about when their refrigerator broke, but they didn't have the $50 to get it fixed. So for the next month, they would have a styrofoam cooler. They would go buy ice and a little thing of milk for their coffee every single morning. And they just made it work until they can chip away at those things. But another lesson I remember too is, I don't know, Trisha, like, do you remember Christmas clubs?
Yes.
Okay. So it's just like
Yes.
at the bank. And so my parents, I will say, we had bank accounts at a young age. And I remember sitting around the dining room table, balancing our checkbook every single month. It was just something that
Mm,
we had to learn to do. I didn't realize that other people didn't learn how to do that until, my husband and I got together. And I remember him saying the first time he ever balanced a checkbook is when he owned a business. I'm like, are you kidding me?
wow.
But it's just, we were taught those things. And like, for the listeners that don't even know what the hell a Christmas club is, Christmas club was when you could get actually like more of an interest rate with, with banks. And, you could go and put, money in every single week or every single month, and it would, grow in interest, or there could be a matching type of component. And then when it was time to do your Christmas shopping, you could take that money out, and it was the a way to kind of set aside money and be able to do things for yourself. So it's just, I've always been a saver. I mean, that was kind of something that was instilled in us, like save it before you need it type of thing. So
Yep.
again, I just think a
I love
lot of
that.
it comes back to, my parents' comfortability with money and not being afraid to talk about it.
I love that. A lot of people don't experience that in the home. I hear that a lot, that um, sometimes people didn't talk about money,
Yeah.
or they spoke negatively about it, like debt is bad, or, never buy anything that you can't pay cash with,
Yeah.
right? And then as they get older, then they have to unlearn some of those money scripts or money beliefs in their head, and it's a little harder when you're
Yeah.
older. So this sort of live below your means, save before you need it, how did any of that come up or help you or support you when you moved into being a business owner, or hinder you, right? Sometimes being so strategic and so, like, I don't want to say frugal, but money conscious can also hinder you. So how did some of those lessons come up in your early stages of being a business owner?
So one thing I do want to back up on first is, I mean, look, I've had debt like other people have had debt. We go to college. there's this credit card application thing that just seems too good to be true, and we all dive in, and then
Yes.
our parents are screaming at us later for a 22% interest rate. And so so I will tell you that I had some debt. I mean, we're talking $3,500, but when you're 22 years old, that seems like the end of the world. And so
Right.
I remember when I chipped away and got out of that debt, I did do the cash thing. I put everything on my debit card because I felt like, hey, if I don't have the money, I shouldn't be spending it. So I did do that. And then I will say, when I got together with my husband, he was like, but you need to be building your credit. And he was just
Right.
like, and there's a lot of perks you can get with credit cards. And as long as you pay everything off every single month, you don't have that stress. So that was an intentional shift. That really, I mean, that gave me a lot of agita, to be honest, like to transition that way, because I think if you've had something where, I mean, hell, when I started out in New York and I started out in insurance, I was working for a big insurance organization, and I was making $24,000 a year. And this was in
Right.
2003.
Hmm.
And so we're talking 2 decades ago, right? But $24,000 a year, they took out my health insurance. Was living in Westchester County. I had rent to pay, I had a car, I had to have a monthly train pass, I had a cell phone, and I was also a statutory employee, so I was a 1099. Nobody tells you when you're 1099, hey, set aside money for taxes. No. And so
Right.
so I was literally like bringing home like less than $150 a month. And so that's when I
Wow.
made the decision to become a personal trainer, because I knew I needed to have extra income to make ends meet. But I mean, I wasn't the fun girl. I wasn't going out and having a good time. I wasn't racking up credit card bills, because I also was investing in myself, and I believed in my career path. I think there's a massive difference between having a job and having a career. And
Mm.
when you have a career, you'll make sacrifices and you'll do without, because like what's down the line. And so the personal training thing was definitely a job. It wasn't my career path, it was a job to just get some income so that I could get to the point that I didn't need the job and I could focus on my career. So when I was able to focus on my career, then that's when things kind of shift for me too.
Okay. So, what I'm hearing is a lot of your earlier lessons came to fruition to support you as you got older. So, the hustle that you mentioned
Mhm.
was you thinking, all right, I need another job, so I'm going to become a personal trainer. Even though you had debt, you were disciplined enough to chip away at it and not think about like trying to be like the Joneses, right?
Yeah.
And have a lifestyle, because this is what happens to a lot of us in our 20s, 30s, even in our 40s, where we go out with friends or we compare ourselves to where other people are, and then we start spending beyond what we have the capacity to do. And then we're left with the debt and we feel bad. So we feel bad either way. If we can't go out and spend the money, we feel bad. If we go out and we rack up the money, we feel bad as well. So I see the discipline that you had, even though you had the debt. And then getting together with your partner, he was like, "You need to build credit." And in this country, everything runs on having great credit,
Yep.
especially as a business owner. So
Mhm.
you're taking these lessons into running a business, which are all great lessons. Is there some, from a financial or money management perspective, was there any missteps that you feel like you made in the early years that some of the people who are listening, if they are in their early years, you would suggest they avoid or give them an alternative?
You know, what I see a lot of, and I don't want to be like a get off my lawn type of person, and yell at the young people, but I see a lot of lavish vacations going on in 20s and early 30s. And I'm like, how the hell have they got the money for that? And I'm just
I
like, but
don't.
I'm also at a position at 45. If I wanted to retire today, I could, so I'm just rather to like, hey, I'll save my fun for a little bit later. But, you know, there's just, it almost seems like there's this mentality of deserving that's out there. And I just never had that. And because I was just like, hey, if I don't got it, I don't got it. I'm not going to act like I got it if I don't got it. And it's, I think that a lot of times when you're looking at what you want. And I will tell you, I mean, there's plenty of people that are like, hey, let me have my fun now while I'm young. And that's
Right.
fine. Hey, if that's you, that's you. But I just also was like, the reason I always wanted more and was like the tourist mentality and things like that was because I know that it could lead to being able to do good in the world. Um,
Hmm.
but I also think that you know, one of my missteps, I mean, was definitely like the not setting aside tax money because nobody told me I
Mm,
needed to do that.
a
And so
percentage of your income.
yeah.
Yes.
So every single time that I talk to somebody that's talking about starting a business or something like that, and they're going to be, having to pay quarterly, they're like, "What do you mean quarterly taxes?" I'm like, "Yeah, that's, when people are like, oh, and I get a tax refund." I said, "I haven't had a freaking tax refund for 20 years." I was like, "I don't want to talk to you," but it's, I mean, I think it's one of those things that nobody pulls you aside and says like, hey, if you're a 1099, people think, oh, it's the side hustle. It's like, it's the gig mentality, but they don't think about like, oh, yeah, it's the gig mentality, but you're also telling people I'm my own business. So you're expected to be a grown up. And so, and there would be instances that I would set aside, I know you put like the 30% income.
Hmm.
Sometimes I did more than that. Like if I had a good commission check and I was like, look, I don't need, need that discretionary money. Like I'm going to put away 50% because then I know I
Mm,
got it. Because I will tell you, I tend to go overly cautious because
yes.
I mean, stuff comes up. And that's the thing too, that it's like a lot
You,
of times people don't have that emergency fund that they need in
yes.
place. And if you're an adult, there's always going to be stuff that happens. If you end up in the hospital and you need to have money to pay off, your deductible from your health insurance, or you have a vehicle and you have a fender bender and you still have to pay the deductible for your car insurance, or hey, your grandmother's sick and you need to fly back home and you need to have that money set aside. I mean, it's just, if you're going to zero, I mean, people do what they have to do. So if you're somebody that's paycheck to paycheck, I feel for
you
you, but I think it's
you and I
more.
are the same in
Yeah.
this fashion and in this vein. And I was actually I spoke at a panel for the New York Black MBA Association.
Mhm.
It was about it was a women's conference, and I talked about on the Bank of You panel. I talked about like there are four levels as a business owner from a financial perspective that you need to take care of. And level one was emergency savings. But when you're a business owner, you have to save more than the 3 to 6 months because you have to factor in your expenses plus the business's expenses
Mhm.
because the business owner invariably gives to the business whenever it's short. So I always factor in about 6 to 12 months of emergency savings. That's the goal. Now you're doing that simultaneously while chipping away at debt, but that is the goal that I give for business owners. And to the point we were talking about before, I always say even though your tax bracket might be 20% or somewhere in the 30s, I sort of average it around 30% of the
Mhm.
income just set aside for taxes, so that when you get the total tax bill, you're not totally surprised. You either will have extra money or maybe there's like a little difference between actual and what you owe, and that's easier to make up than just paying a big tax bill in April or March, coming up with that cash.
Mhm. Well, and I think it's important because there are insurance products out there to help you that way. So it's just like, so, I will tell you one of the first things I did when I started my business is because I didn't have employees. I wasn't going to have like a 401k plan or anything else. So I purchased my first whole life policy with an aggressive cash accrual arm because that was my
Smart.
safe money. Oh my God. And especially buying that at 24 years old, it was gold. Like it was,
Can you just explain to people what that is really quickly, since you're an insurance
yeah.
expert? Can you
So
explain why the whole life versus something
term.
else at
Yeah.
that age?
Yeah, I mean, to be honest, like you can look at it like think of term life insurance as renting, thinking of whole life insurance as buying. So it's just like that's the easiest concept. And so when you buy something, you typically are accruing an asset and you're building kind of revenue. So a whole life policy, I mean, a life insurance policy, as long as you're healthy, it's never going to get cheaper than it is for you today because as you get older, the pricing goes up. So by having kind of the foresight and having a mentor that pushed me and said like, hey, Susan, you need to look at doing this. And I backed into it because I said, you know what? I can spend $300 a month on me, investing in me and my future. So that's what we backed into. And we said, okay, how much insurance can you get for $300 a month? And I think at that point it was like $150,000 policy. But again, I didn't care for the death benefit. I really wanted it for the cash accrual. So it's just like
Mhm.
20 something years later, I got a few $100,000 in there. And that, if say I want to buy a second home, that's a down payment in a home. Or say I have that emergency, I can tap that in because when you pull out that cash, it's tax free. You can take a loan against the death benefit. So you can take a loan against the cash value. One of the other things I did is I also, and this has actually been in the past, I want to say 10 years. I mean, I'd say probably about 15 years ago, I got my own disability policy.
Yes.
So if
You
God
all you all got me into that.
Yes. So, but the other thing policy I put in place probably about, I don't know, it was pre-COVID, I would say like 6, 7 years ago, is I did a business overhead policy. And so what a business overhead policy is basically like a disability policy on the owner. So God forbid something happens to me. Yes, I have my disability policy to give me money to make sure that my mortgage is paid and all that stuff. But the business overhead also, I think with the policy I have, would give 9 grand a month to the company.
Mhm.
So it's just like, so if you had to hire a new Susan for a little bit, or if you had to go out and get, say there was something that happened and we had to go get new space, and I couldn't bring in the clients and things like that. There's a way to tap those for claims. So there's different mechanisms. That's why I think the less you got, the more important it is to work with like a financial planner and somebody that knows. Because I'll tell you, I'm not the greatest with money. Like there's money in the bank, I can pay the bills. Like it's just like I will tell you that's kind of how I roll. And it makes my CFO crazy. But with me, it was looking at what was going to be the best thing, and bringing in the right people. And you have to be smart enough to know, but you got to be smarter enough to know what you don't know. And if there's something
Yeah.
that you don't know, you have to trust the experts. Just like I'm not going to practice law, or I'm not going to like act like I'm a CPA. I go to those people and ask those poignant questions too if I don't understand something. Just like they're going to, like, they know enough to get themselves in trouble on insurance, and then they're going to tap me in and be like, hey Susan, what do you think about this? So
Right. Yeah. I mean, I want you to give yourself credit, right? You said, I'm not so great with money. You are very strategic and thoughtful around money. You might not know all the numbers and how things move into each other, but you have the discipline, which
yeah.
is important, and you've built some of the education over time. So I want to dive into like the growth of your business, right? You started 26 years
Mhm.
old. I'm assuming you're in your 40s because you mentioned something
Yeah.
around that number, but we don't need to get into details.
No, fine.
Um, in this 20 something year history, you have grown the business to a multi-million dollar business. To what do you attribute that growth?
So I'm 45. I don't care. I lied about my age until I hit 30 because I always had this gray stuff going on. So I could get by with that. But, trying to sell long-term care policy when you're 28 years old and they're like, hey, kid, what are you trying to sell me? Didn't really
Right.
work. So,
I feel
uh,
this. I feel the same way trying to sell people on financial management. They're like, "What do you know? You look like 20
yeah, you're a
something."
kid. You're a kid. Yeah. So, I would say like with me and getting to where I mean, I will tell you the first 3 years I busted my ass. And I always tell people when they start out, even in a sales capacity, like if they're in a new sales role or they're a business owner, I'm like, if you are willing to do without and make sacrifices for the first 3 years, network like crazy, get your name out there, go to the networking events, go to, if somebody asks you to coffee, say yes to everything, and be willing to work late, not take vacations, work on the weekends if you have to. Like, if you do that for 3 years, you will set yourself up and the phone will just start ringing. And so, I I was always okay with that. I was never afraid of hard work. And so, that was the first step that I think really helped me because
So
and I
let's
won't
so let's say- let's just say that helped you like first 3 to 5 years. Then what helped you next 5 to 10 years?
um you know the framework that I had set up, and just, I mean, my company, we've always been lean and mean. So it's just like, if it was work that I could do, I mean, I've never been a business owner that's hanging out on the beach drinking a Mai Tai while everybody does the work. I mean, I'm working 50 hours a week. I mean, I work, and then open enrollment comes around fourth quarter, it can be up to 80
Mhm.
or more. And so I'm not one of those people that's just not in the trenches and letting people just do. But I just saw constant growth. And so I saw constant growth. And so when we saw constant growth and when we needed to hire people, then we hired people. And then if we had the people and then we had a good year, then how can we reward those people? So we could do that with bonuses, or we could do that with different benefits, or we could do that with just, just perks. I mean, one of the probably the smartest things I did from day one is I mean, this wasn't common in, 2005, is that especially in insurance, I was like, as long as you have your computer and your phone, you should be able to work anywhere in the world. And so
Mhm.
I didn't realize how much that would help me later on, especially with insurance. I mean, when COVID rolled around, these insurance brokerages that still have paper were freaking out. And I was like, yeah, we're good. I'm like, we didn't miss a beat. And, a lot of people were like, not, taking time off and doing the work from home, but they were half-assing the work from home. We were just as busy, and we're still working the same amount of hours we were pre-COVID, because we had set things up.
Mhm.
But, again, like, when I started out and it came to the finances, I would do like the general bookkeeping myself. So I would do the data entry and things like that. So I did that until I didn't want to do that anymore. But also
Right.
too, when I didn't have the time because I was busy with sales. So, I had a client of mine that I used to work for Paychex, a payroll company. And so
Okay.
she was the controller for a software company. And so she had done QuickBooks training. And so she came in, taught me how to do QuickBooks, taught me how to do that type of stuff. And then I would do the data entry. And then she would just come in and kind of do the reconciliation every single month. So that's kind of how things started. And
Mhm.
then got to a point where I was like, I don't want to do the data entry anymore, because I'm too busy. So then I started bringing in students from Baruch College. So,
Mhm.
Baruch has such a great program, accounting program. And
Mhm.
so I started bringing in students for doing the data entry and everything. And then I still had that outside controller that would come in once a month, do all the reconciliation. If I needed to talk to her, could touch base on a weekly basis. But then also too, for me, I mean, I paid these students. But they knew that the deal was, when you're 6 months out from graduating and you're going to go work at a big CPA firm, and more power to you. You're not breaking my heart. I want you to succeed. Their job was to train the next person.
Yeah.
And so, so then it was also giving them another skill set on how to train somebody. And so that it helped them, for their next endeavor. And then, we got to the point that just things had grown. And then about 8, 9 years ago, then we brought in a CFO. And, we still
And
have
said you said to me that the moment you hired a CFO, it changed your business.
everything. Yeah.
How? How? How?
Because he's way more intentional. I mean, I know you said I'm intentional with money, but again, I'm like, money in the bank. I can pay my bills,
Most business owners are like, they look at the bank account and that's it.
yeah. And so I remember he said to me, he's like, Susan, how many times, he said, how many times a day do you look at QuickBooks? I was like, a day? I'm like, a month. I said, I look at it once a month. I was like, right before Debbie comes in, and that's it. And he started like shaking. He's like, oh God, no, you can't do that. You can't do that. And so he actually made us be so conservative. And we have, so we have too many bank accounts is what we have, but it's just like, so we had the operating account and the payroll account, but then we also had a business savings account that I had always referred to as my tax account. So it's just like, in my head, I had always, like, when I
Yes.
would go to the bank and I would put a check in, I would take half that money and I would put it into the business savings account and so I always did that. But then he came in and he just really went conservative and socked away, socked away, socked away. And so that, we have enough surplus that when COVID rolled around, I could look the employees and say, look, because everybody was stressed, right? Everybody was like, oh my God, people are laying off companies. What are we going to do? And I will tell you, not that insurance is bulletproof, but people are always going to pay their insurance bill because it's the one time you have it. Don't have it is the one time you need it, right? And so with us, I was able to look at the staff and say, hey, if we lost all of our clients tomorrow, everybody could still get paid for 2 years. I mean,
Mm-hmm.
to be able to have that confidence and to say that to the employees, you could just tell, like they were like, huh, okay, like we're
Yep.
okay.
Yep.
And just as a business owner, because I mean, I'll tell you, I mean, I've been through, 2008,
Mm-hmm.
we had the downturn there and we survived that. COVID happened, we survived that. I mean, even like prior to that, Sandy impacted a lot
Mm-hmm.
of us here in New York, and we survived that. So, I mean, it's just by having that person that can look at the finances in a different way because they have that skill set, and they can look at like, hey, we can shift this here, we can do this here. And he also came up with different creative things. And so prime example of a creative thing is, we were looking at raises a couple of years ago, and we gave raises, but then what we did is we actually added, like, basically gave the employees expense accounts,
Mm-hmm.
because that could be a business expense. So they actually got a greater impact of like a raise, but then they were able to use an expense account in a different way to, pay for their home internet because they're working from home a couple of days a week, pay for their cell phones because even though they're using them for personal, they're also using them for work when they need to use them for work, paying for, food, like we pay for lunch every single day. So it's just like,
Right.
so it gave, it was a way to do things a little bit differently that actually impacted the business in a better way, but it actually impacted the employees in an even greater way too. I would have never
Yeah.
come up with
So
that. Yeah.
yeah. So I mean, basically, it sounds like your CFO was sort of like your strategic thinking partner,
Yeah.
right? Not only in times of a financial downturn, but also in times where you had enough money to reward the employees and think of creative ways to do that. So it wasn't just additional cash, but you still kept the bookkeeper people, right? Who were doing the categorizing transactions and making sure numbers were organized.
I mean, now the CFO actually does that because he does it instantaneously. Like, he doesn't let things get
Mhm.
stacked up. We had to get a mission statement in. He does all the entry. If we need to shift things around, he could shift things around and things like that, because again,
Mhm.
he's in the environment on a daily basis. So it's just like, right now, I mean, he doesn't mind doing it, but since I do the expert witnessing is another animal because it's time tracking and getting paid for your time as opposed to getting paid for your product. So
Right, right.
and so he helped actually with that too, because consulting wasn't something that we were doing before. And
Mhm.
so it's just like, so that was able to, because then we use Minute Seven is the company that we use. And then it does the
Mhm.
time tracking, and then it dumps right into QuickBooks for invoicing. So
Yeah.
that was something that really helped streamline that process too, because I was scratching my head saying, am I going to have an Excel spreadsheet and figure this out, out every single time? And it's so much
Yeah.
easier with these systems.
What I would say to that is, and for the audience, so that you understand what is going on here. I wouldn't recommend having one financial accounting person doing all of the jobs, because I have seen experiences with clients where unfortunately that one person doing everything ended up being fraudulent, because you're not really seeing, there's no separation of duties, and then there's no checks and balances. But the other great thing that I'm hearing here, which is what we do with our clients, what I do with my clients, is there is something you have to deal with financially, tactically, and we strategically think about like what is the right system, format, template to set up so that it feeds all through the numbers and that we see the numbers the way we need to, and then make an assessment of, is this working, is this profitable,
Mhm.
is this not, right? So this is awesome that you brought the CFO into the business. He's helped you grow. You also said to me that the other one of the other reasons for growth is that you always are open to new opportunities. Can you share, a couple of times with you being open? to new opportunities added to the growth of your business?
Yeah. So, I mean, the first thing I can think of, to be honest, is like you know, I started out in insurance and I was employee benefits. So I was the health insurance, the dental insurance, all that stuff. But I actually worked for a really large firm that was at the time, majority of theirs was property and casualty. So property and casualty is like your business insurance, like general liability, errors and emissions, also your personal lines, homeowners, auto, and there can be crazy things like kidnapping, ransom, and aviation, all that good stuff. But so they required me to get PNC license. It was something that wasn't even on my radar, that I was like, what am I doing? But I'm actually really, really good at it, because I just,
Mhm.
my, I get called a dreams dasher because I just, my head can't help but think about risk when somebody starts telling me about their business. Like
Of
somebody can tell
course,
me.
you're an insurance person.
Exactly.
Yeah.
So that was probably the first time being open led to like other, type of businesses. And then when the Affordable Care Act became law, and that,
Mm.
that became law in 2013. And well, that's when things started kind of getting implemented. And a lot of people were sticking their head in the sand and saying, what do I do? And, for me, it was like, it was an opportunity to embrace it. So I got a certification that was like the equivalent to 100 hours of class, 10 proctored exams. I mean, it wasn't an easy thing to get, but then that actually led to me becoming an expert witness on the Affordable Care Act and working on medical malpractice cases, high-end trip and falls, construction litigations in 42 states now.
Wow.
So that was something that, like, again, I didn't know what the decision would lead to. Um, and
Mhm.
and so those were things. And then, then most recently, in 2022, I wrote a book that turned into a nonprofit the end of last year. And so it's just having some of those opportunities to speak nationally on, veterans affairs and just the work that we're doing to help veterans do good in their backyards and beyond as well.
Awesome. So 20 something years later. So you gave a lot of nuggets for like the early business owners. What are some things to do, including make sure you have disability insurance
Mhm.
if you're a sole proprietor. But now that you are 20 something years in business, you know, uh, uh, at a different level in terms of revenue, 7 to 8 figures in terms of revenue. Um, I want to know uh, what are some of the lessons that you would share for those who are more established in their business? What are some of the ways that you would suggest for, just running your business, growing your business? And to that, I want to add, what are some like sales strategies that have worked for you? I know there's referral partners,
Mhm.
there's leveraging marketing, there's affiliate, working with affiliates. So um, what are some of the ways that you've grown the business, and what is the advice that you could give to more established business owners who are in that 7, 8 figure category?
So I will tell you, I just spoke at a conference in Cleveland last week. And one of the questions I asked the audience, there was an audience of it was about 400 people. And I said, raise your hand if you know how much you're worth per hour. And in a room of
Mm,
about 400 people, 3 people raised their hand. And
mm,
if you don't know how much you're worth per hour, you're missing the boat. Because you don't have to be a business owner. You can be a salesperson. You can be, anybody that's making a salary. And so the reason I say that is in like kind of the down and dirty back of the napkin. I mean, there's a lot of factors to figure this out. But what I always tell people is like on average, if you know how many hours you work per week, take that times 52, and whatever your income is, divide it by that number, and you'll come up with a number. And then you'll know like what is the cost of your time. Because the thing I see happen so many times is business owners give it away. They give away their expertise and they give away their time, and there's a value to that. So
yep.
once you know what your worth is per hour, I think right now I think $472 is what I'm worth right now. And so with that, it makes thinking yes or no to things so much easier, because you know what the actual cost is. If somebody says, "Hey, I want to pick your brain, can grab coffee?" It's not the $5 coffee. It's the
Right.
$472 of my time, plus even more of that, because if it takes me a half hour to get there, an hour meeting, a half hour back, I mean, then we're taking that times two. And that's a really freaking expensive cup of coffee. So then you have to say, like, what do I have to do when I get back to my office to replace that missing revenue? So when
Mm.
somebody asks me to speak at conferences, and and that's why, like a lot of times people have speaker fees because they know that there's a value to their time. And so looking at those type of things, I think is if your people listening to this don't go and figure that out for themselves, I think that's just such a mistake, because once you know that, that makes everything kind of line up for you, because then you're kind of okay saying no to things, because you're like, you know what, I would love to do this. I mean, to be honest, I just said no to a speaking opportunity that was in Philadelphia because I was willing to waive my speaking fee. And but then they asked me to register for the conference and pay my own expenses. And so I was like, yes, but if I come down there and I'm already waiving my speaking fee and I have the expenses and I have to register for the freaking conference that wants me to speak there, I'm like, I'm out 20 grand before I even look. And so like, but I know that. And if you don't know that, then I think a lot of times you can allow yourself to be walked all over.
And this is so okay. So there's so many things. But I just put one line in the chat. Know how much you're worth per hour. What is the cost of your time? That resonates so strongly for me because when I was doing consultations, everyone gives a complimentary consultation. And this, I'm going to say the disclaimer, it depends on your industry and your expertise. I noticed when I was doing prospecting calls that even if they decided, or we decided there wasn't a fit or they didn't need a CFO at this moment, I provided them a roadmap of what to do next and who to speak to next. And I even gave them access to my referral network.
Yeah.
There is value in that, right? And even though I put 30 minutes on there, I'm spending an hour with people, right? Because I want to give people value. And financial empowerment is important to me. So then I realized over time, wait a minute, I'm spending time
Mhm.
and knowledge, because you didn't mention that, but what is the value of your time and your knowledge that you're given in that time frame? And it is so important. It's definitely something that I learned later in my business, to value my time. I remember you said, if someone shows up late 2 times or 3 times or doesn't show up to a meeting, even if
I'm
it's,
out.
what is it? You're
Yeah,
out. You're
there's
like,
three strikes and you're out. Yeah. If you no
right,
show me, I'll never meet with you again. Yeah. Um,
right.
yeah.
That was so bold, but I was like, yeah, why not? Because,
Well, yeah,
yeah,
and so let me back that up. And the reason behind that is I work really, really hard to have a drama-free life. And if your life is so dramatic that you've had to reschedule on me 3 times, there's something going on in your world that I don't want to have anywhere close to me. So, but also too, like the no show, I will never meet with you again. I mean, because there's always a way to send a text. And like if you're in the New York City subway and it's stopped, and you do it on your phone and then it comes in, then I'll give you a pass. I know stuff like that happens, but there's typically always a way to send an email, to shoot a text, to pick up the phone and make a call, because it's disrespectful. And it's communicating that you think your time is more important than mine. And that
yeah,
pisses me off. And so,
yeah,
so those are one of the things that, yeah, I always tell people all the time. And I will tell you, I don't know about you, Trisha, but there seems to be this influx in having sales vendors automatically send you a meeting request, and they don't
yeah.
have permission to do. And that if you do that to me, you are so
I,
blacklisted. And I will screenshot it. I will send it to all my friends. All my friends will never meet with you. I will kill your whole family. I mean, it's just like that. I will take no prisoners. So,
Wait, where's the Missouri lady? Like,
oh, I
this
know.
sounds like a New York, straight up New York lady right now.
Yeah, but those are the things. It's just like, it's just being kind and just using
Yeah,
some common sense, and just, it's the
yeah,
golden rule, right? I mean, you want
yes,
people to treat you well,
yes.
you treat them well.
Yes, especially, and I want to reiterate this point, especially for my women entrepreneurs out there. Know how much your time is worth. Know how much you're worth per hour, even if you're in a service-based business, even if you do value-based pricing, even if you do retainers and all of those, even if you have a product-based business, know how much your time is worth, because it also helps you figure out the things you don't know, that you don't need to be researching on Google or Chat GPT. Hire somebody else to do it. Like, think of the cost benefit
So
and the
good.
value of your time spent on
Exactly.
doing something that's going to take forever, which somebody could do in like 30 minutes, 45 minutes.
Exactly.
That's a waste of time and a
Exactly.
waste of money. Like,
Yep.
it's a
But if you
different,
don't, I mean, I'll tell you, I mean, so women, Like I like all my friends, I mean, even my friends that are in their late 20s, when they're like complaining about doing laundry and cleaning their apartment, I'm like, what's your hourly worth? I'm like, what's your hourly worth? And then how much is it going to cost you to get a housekeeper? It's just like in New York, it's just like I pay my housekeeper $120 a week, and it's just like, and so because I know if I'm doing all that work, I mean, we're going to rack up some bills that I don't that I don't want
Right,
to pay.
right,
So it's
right,
just like,
right.
but it's so true, Trisha. I mean, it's like understanding that, because you're exactly right. You won't go down the Google rabbit hole if you're like, hey, is there somebody that I could ask that I could pay for this that would be, half the cost of me wasting an hour on the internet right now?
Absolutely. I do that all the time now. I didn't do it before. I was now 8 years in business. I didn't do it before. It's just a different way of thinking. It
Yeah.
frees up your brain and your mind. Now, that disclaimer, your business needs to be in a position that it can afford to do it.
Yes.
Don't try to live to your lifestyle,
Mhm.
live to your means. And I think that that is an ongoing message that we've gotten from you, Susan. I want to thank you so very much for your time, for your nuggets. I tried to capture some of them here in the captions, but there's so many. Y'all have to go back, rewind, come again, replay it on LinkedIn Live. It's going to be available here. Thank you again, Susan Combs, Combs and Co. Insurance brokerage firm. If you're looking for an insurance broker, she's your
Thank you.
lady right here. If you're looking for an expert witness, she's your lady. If you're looking for someone to speak on Affordable Care Act, she's your lady. If you want somebody to talk about farms in Missouri, she's your
I'll tap on
she's
a
your
cousin.
lady.
I do the books. I was like, I do the books for the farm, and I know how to make smart decisions. But I tap in a lot of people for that one. Yeah.
Yes, yes. She's one of the Wonder Women in my life, and I appreciate you for coming on my new series called Dancing with Numbers. In real life, basically bringing some of these nuggets, knowledge points around financial education, financial empowerment, and how do you grow your business to real life, making them real conversations so that we don't feel like we are out here alone as business owners. We're all going through things. We're all going through this journey relationship with money and numbers. And I want to continue to bring that to you all. Very last question. How would you describe your relationship to numbers in terms of a dance?
In terms of a dance, I see the entire choreographedness, but I bring in the right people to do the choreographing, but then I'm good at following the steps to get the end results you need.
I love it. She follows choreography. That's important to a choreographer that you take the note. Um, Thank you again, Susan. Everyone, stay tuned for the next business owner that we have on Dancing with Numbers in Real Life.